When you need to build up your team to handle the growing chaos at work, use Indeed Sponsored Jobs. It gives your job post the boost it needs to be seen and helps reach people with the right skills, certifications, and more. Spend less time searching and more time actually interviewing candidates who check all your boxes. Listeners of this show will get a $75 sponsored job credit at Indeed.com/podcast. That's Indeed.com/podcast. Terms and conditions apply. Need a hiring hero? This is a job for Indeed Sponsored Jobs.
What's that, bud? The Lincoln Summer Sales event is on now with exclusive offers? Oh, so you want to feel the wind pouring through the available open panoramic vista roof on a road trip? And spend the afternoon beachside hanging out on the back of the spacious Lincoln Splitgate? Okay, I'll schedule a Lincoln test drive today, right before your vet appointment. Visit your local Lincoln retailer or learn more at Lincoln.com.
Hello and welcome to FinTech Insider Insights. I'm Benjamin Ensor, Director of Research and Strategy at 11FS. And today I'm delighted to be joined by Jordan Sinclair, President of Robinhood UK. Robinhood has spent the past decade redefining retail investing, making financial markets more accessible to millions of customers in the United States and more recently elsewhere in the world. Last week, the company unveiled what may be its boldest vision yet. At its latest product event, Robinhood announced a wave of launches centered around its vision for borderless markets, from tokenized US stocks and ETFs and Robinhood Chain to a broader push into AI-powered investing and agentic products. It's a bold bet that the future of finance won't be just digital, it'll be tokenized, intelligent, and increasingly autonomous. So today we're going to unpack what these announcements mean, whether tokenization is finally having its moment, and what happens when AI moves from helping us make decisions to acting on our behalf. So I'm absolutely delighted to welcome you, Jordan. Thank you so much for joining us. How are you doing?
Thanks for having me. I'm good. A little bit hot in London. We were reminiscing we should be on a beach in Cape Town, but
indeed,
things are as they are.
It's a sentence you rarely hear. It's a little bit hot in London, but it's nice, nice to hear it. So, as I mentioned, big product launch from Robinhood. What's the sort of overarching vision behind borderless markets, to the extent it's not embedded in that phrase?
Yeah, and you mentioned that we started in the US, and that is the genesis of Robinhood, but our ambition has always been global. So we set that out on kind of 3 arcs over 3 timelines to become the number one in active traders, number one in wallet share, and over a slightly longer horizon to build the global financial ecosystem. We now have almost 28 million customers, over 1 million customers outside the US, almost 27 million customers in the US. And what you're seeing is kind of the culmination of that vision in 2 parts. Here in the UK, we have our brokerage business and we have a crypto business through our acquisition of Bitstamp. In the EU, we have a crypto business and the acquisition of Bitstamp there, which gave us access to over 50 markets. Well, what you're seeing is the technology that crypto provides and how do we use that to almost rebuild the infrastructure of the market as if we started today, rather than perhaps how it is. And probably that is the reason why some markets haven't achieved kind of high equity participation or access to stocks, where it is quite simple in the US. So it was exciting for us to announce that here in London. A lot of excitement with our customers, with our partners, with our teams. We had Vlad, our group CEO, here at Greenwich at the Royal Navy College. So I mean, it's a great way for us to kind of tell the world that we aren't just a US-based business anymore. We do see this as Robinhood being accessible to everyone. And tokenization is often a term I think we hear a lot. I think in the UK particularly, it's often a PowerPoint slide term, or people talk about it as the future. We're a firm that's actually done it. I think that is a differentiator in today's world. We already had launched our classic stock token product in the EU, which gave customers access to almost 2,000 US stocks and ETFs. And we announced our intention to launch the Robinhood Chain and launch it from a mainnet perspective. We've actually done that now. And I think that does just show how quickly we move, but also our commitment to building the future at the same time as providing the best customer service and products that we can in today's world, as well as the future.
I must say it's nice that Robinhood is now in the UK, because it always felt like a tiny bit of cultural appropriation that the company was named after a sort of English folk hero. So it's good that you are now a British company as well as an American one.
Sadly, I don't know if you saw Major Oak, actually, the large tree passed away.
I didn't see
So
that.
even though an American company, that was news that was felt across the organization.
So tell us a little bit more about tokenization. I mean, what does tokenization enable Robinhood to do for its customers that you couldn't do without it? So for people who are not sort of familiar with security settlement, how does tokenization create efficiencies for you or for your customers?
If you think about the world we live in today, news is 24/7, markets are moving, customers are engaged in the markets, but the traditional setup of, let's look at brokerage in particular, is still somewhat antiquated in that if you buy a stock today or you sell a stock, your settlement time is not instant, which in a world of instant payments, instant everything, seems a bit crazy that if you sell a stock on Friday, you actually have to wait for the whole weekend to pass. And imagine if Monday is a public holiday, you have to wait even further. So tokenization provides instant settlement. The other side of it is 24/7. We have a 7-day week, and yet markets only trade 5 days a week. But we know that there are market moving news events, and there are things that actually are tradable on the weekends. It's just we don't have a system to provide that access to customers. And I think crypto is a great way where you could see retail driving that market, where retail wanted access to a 24/7 product. I think the ability also to move your asset and use it somewhere else. Today, in the traditional world, you buy Apple and you hold it in your brokerage account. There's not much you can actually do with that Apple stock. Can you borrow against it and go do something with it that private banking clients have the access to through Lombard lending, if through their portfolio, but the average retail customer doesn't? Can you move it into a wallet and send it to someone else? Can you use it in DeFi as collateral or earn yield? All those are limitations of the current system. So I think tokenization removes some of those barriers, but I think what it opens up is new markets. Public equities continues to grow and participation continues to grow. But private markets, and you think of real estate, you think of our private companies like Anthropic and OpenAI, where retail can't get access to these wealth creation vehicles, but those in VCs or private wealth investors or the wealthy can, and they can get in at 100 billion. And when these companies list, they're $1 trillion, and retail now has to hope they get to 10 trillion in order to make the equivalent. So I think that's what tokenization opens up. And I think that's really what you're going to see is a rewriting of how traditional markets work. And there'll be a period of time where they're going to run parallel. I think that's absolutely fine. But also opening up markets that currently we can't access.
So view tokenization is as much about enabling retail investors to invest in new sort of private market assets as it is about increasing trading or speeding up trading settlement.
I think it gives you both, right? I think it's doing something better than it's done today, and then giving customers something new, and the ability to fractionalize a large private investment. There is price discovery now more and more in terms of secondaries, and these companies are staying private for longer. That does open up an ability for customers to own this asset, but tokenization actually provides the mechanism and technology for it to work. And then you think about the vehicles, a wallet that a customer can actually hold and decide what to do with that ownership. I think ownership is that important word that we really do see as a theme, is giving customers the ability to have choice, to have access, and then to own a piece of the economy that isn't restricted to public equities.
So if they own a token, does that actually give them the legal title to the underlying asset, or does somebody else still hold the title to the underlying asset?
So the stock tokens we've launched now, which give access to US stocks, and that is backed 1-to-1, which does give customers a right to the underlying collateral. We're working on making that redeemable in future. That is what we ultimately see is what customers want, and that's also for our institutional partners. So we'll start with institutional partners in terms of redeemability for the actual underlying. But I think it's important for customers with this product to know, in a hypothetical scenario, if Robinhood was to go bankrupt, I think at 300 billion plus assets under management, I think we're okay, but you got to think about this, and you also got to think about customers. Customers are very cautious in who they use their money with. Trust is important, protections, regulation. So that's an important part of this. So we're continuing to build out this product.
Yeah, because obviously we've had many situations in the past where investors have got caught out because they're holding a derivative that actually doesn't give them title to some of the underlying assets. So let's talk about Robinhood's expansion internationally in the UK and elsewhere. So you launched in the UK, I think, sort of the end of 2023, beginning of 2024. You sort of did a slow rollout and so on. As a South African, how much fun do you have sort of talking to your colleagues in the States about some of the differences between investors in the UK, investors elsewhere in Europe, and American investors? Because the behavior isn't the same, right?
Customers are definitely not the same. And I think we have a lot of fun in our office. We have more nationalities than probably the World Cup at the moment in our office. And there's some strong opinions. I think one benefit of the extended World Cup format is that everyone in our office, I think, is actually represented this year, which is fun. But I think that's the most important bit, is to recognize that customers aren't the same in each market, and you have to spend time with them and you have to understand what their needs are. A US customer and a UK customer aren't the same, but that doesn't mean you can't adapt your product in a way that meets their needs. And I think that's exactly how we started building this business. It was our first market outside the US. We spent a lot of time with UK customers and understand their pain points. Why is it so hard to buy US stock in the UK? Why are you paying £12 a trade on the incumbent platform? Why is pricing 15 minutes delayed on most platforms? Why do ISAs come with a fee when it's just an account giving customers tax-free investing? Why are FX fees so high? I think for a big thing for UK customers is, why do we have to wait for the market to open? Why can't we trade 24/5? These were basic needs of a UK customer, where if you had to flip that to the US customer, not really thinking about FX fees, they're trading in dollars. Their market, they have a slightly different consideration on time zones, East Coast, West Coast. So we started there, and that was a proof point that we found from our customers. We've made it easier and better, and we do see ourselves as the best place to trade the US market. But what else do UK customers need? They need local account types. ISAs and SIPs are great products in order to invest tax efficiently and for the long term. We actually give customers 2% back on their contributions to an ISA, where we found this to be...
What do you mean by 2% back?
So we found this hugely kind of transformative in customer behavior, where we actually reward customers for investing. If you contribute to your stocks and shares ISA with your 20 grand a year allowance, which when I tell my US colleagues we get 20 grand a year to invest tax-free, that they think that's an amazing product. So sometimes maybe we don't shout out about that enough in the UK. I mean, that's a fantastic product, right?
It's going away, but anyway, but yes, but go down. Yep.
Well, stocks and shares ISA limits is still staying at 20, cash is lower. But I think that's it, right? And I've spent a lot of time on steering committees with the Chancellor and policy and regulators around how do we fix risk warnings to make it more understandable for customers to start investing, and how do we get customers more educated about investing? So when they have a choice of investing in cash and earning a low interest rate that's eroded by inflation, or investing in a stocks and shares ISA, whether it's ours or someone else's, what can that grow to over time to help to meet those same goals? And come back to your point on different customer trends and aspects. I think education is a bigger gap here than it is in the US. Here, your household wealth and equities is around 20%. In the US, it's growing to around 60%. And our goal is that actually it should be 100%. And we recently launched Trump accounts in the US together with Treasury and Bank of New York, where children at birth are given access to an investment account that will grow over time. And the UK's got a lot of those same mechanisms, the junior ISA, the ISA landscape. It's just either making things happen by default in terms of behavior or changing behavior. And I think education and incentives can do that.
So the UK has long had this gap compared with markets elsewhere in the world, where there are just fewer people in Britain investing in the markets than you see certainly in the States, but also in many other markets in Europe. What's your view on that?
The UK customers are great savers, but we're not the best investors. And that's not necessarily a problem, it's an opportunity. But when we look at the UK statistics, I think it's roughly 20% household wealth is in equities, where the number in the US is closer to 35, 40. And we don't necessarily need to be the US, but I think what we need to improve is participation. I think over time that will change. And we think about the US, where now they've just launched Trump accounts, where basically all children are given an investing account at birth. And equity participation in terms of allocation of household wealth, but also just in terms of equity participation and actually investing. The goal there is actually to eventually get to 100%. And I think that's where the UK, it's an ambition, but getting people started, finding mechanisms to get them started, helping customers understand junior ISAs, helping customers understand the benefits of long-term investing, better education. It's something we offer in terms of a 2% match where we incentivize customers to invest and reward them for investing behavior. Equally reminding customers why cash has a place, and it absolutely does in a portfolio, but what is inflation doing to that cash? So I think in the UK, we see it as a really big opportunity where historically access has been tricky. It's been expensive. We have a lot of research where customers have felt like investing isn't for them. It's almost a reward for being wealthy rather than just someone wants to buy a house. And when we talk to our US customers and our UK customers and EU and even people in South Africa at home, the goals are exactly the same. I want to save for retirement. I want to buy a house. I want to save for school fees, medical fees, family members. How they get there, though, is very different. I think in the US, that traditionally has been the route of, well, the S&P 500 may be my route to gain to buy my house over time, where here it's what's the Bank of England paying as a base rate, and I'm going to leave it in my cash ISA. And you can imagine over 20 years, which customer gets there first. So I think there's a great opportunity in terms of education. I think there's a lot of the right ingredients. There's a good push from regulators, treasury, government, private firms. We have the Chancellor's Retail Investment Campaign, risk warning reviews, advice guidance from the FCA as well. All these things to help people start investing. So I think it's going to take us some time, but we'll get there.
Thank you. But let's talk about AI, because Robinhood has been quite a relatively fast mover in AI, rolling out Robinhood Cortex. I can't remember when you launched it. It was like a year and a half back.
Yep.
Can you tell us a little bit about how that's going, how your investors are using it, what's starting to happen differently in sort of your customers' behavior because of Cortex?
I mean, that personally, it's a product I love. I use it a lot. Our customers use it a lot. And what we're doing is helping customers understand why a stock moved. And that's often been a disconnect to build confidence in the market is, I'm interested in Apple. I've been following the news. The stock price just went down today or it went up today, and I don't know why. What Cortex helps is the customer to understand what's driven that movement. Was it an analyst put out a research report with a new price target? Were sales down in China? Were memory costs increased and Apple changed their prices? Those are the types of things where cumulatively can move a price. But does a retail customer have the ability to put all those data points together? That's what we put in-app on the stock detail page that gives that customer that information. It's not asking them to trade. It's not asking them to buy or sell. It's just helping them understand why their portfolio is moving. So we do see a lot of power in the AI tool, and Cortex continue to grow, where it'll give customers almost that bridge between, I want to get started, I can't afford, or I don't know where to go for advice, and I need some help. And I think AI is a huge capability to bridge that divide in the UK, where it's probably a large gap between education and confidence.
How far will that help go? How far do you think you'll go down the path of AI? Because realistically, AI now can probably manage a stock portfolio far better than I can, and probably far better than many customers can. I mean, how far down that path do you go, and how do you sort of manage the risks and the challenges in that?
I think you do have to marry the two, risks and the benefits. And it's like our agentic trading offering, where we make sure that customers can get access to what institutional investors have had for a long time, algorithmic trading and AI-supported trading, but with a human level where you can dictate what the agent has access to in terms of a segregated account, whether the agent actually can make trades on your behalf, making it clear in terms of risk disclosure, education, being able to turn it off if you no longer want it. I think all of that, and also considering which of your customer set is it right for, I do think is an important part of these products. But that's probably a range of an agentic trading tool connected to your Claude or your model of choice, I guess, MCP, and making that understandable and a journey that's quite easy. And on the other side, it's just I want to understand why the market's moving. I think there is a scale where today, though, on both of those decisions or choices, customers in the UK don't have either. And the access to advice is very expensive. And I think there was a FCA report in 2022, 2023, where 8% of customers got advice, which is crazy.
It's a huge gap. Yeah.
We need to be thinking about our financial lives, building up a nest egg, as you said, thinking about the long term. But there aren't necessarily those tools out there for customers to do. And the regulator's done a great job here too. We look at advice guidance and targeted support. And again, with the AI review at the same time, thinking about risk warnings. What you've got is a kind of a progressive regulatory roadmap that supports the progressive technologies that are moving always at pace. And I think that's a tough job to try and do both at the same time. But I think there's a strong recognition and has been probably the last 3 years in the UK where everyone is supportive of more people investing is good for Britain. Doing that in the right way is good for customers. How do we do that together? So I think we're on the right track. It does, like investing, take time. And I think we can often fall into a trap of wanting to show results after year one. But just like investing time in market, and you look at FTSE and S&P returns over time, I think you'll see exactly the same in the UK in terms of participation.
So a cheeky question just before we come to a break. You're president of Robinhood UK. You're right that more investing in UK assets is good for the UK, but at the moment, Robinhood doesn't offer access to UK equities. Presumably that's something that will change at some point.
Yes.
There's no news on when that might
That's
change.
definitely top of mind for us. We hear from our customers at our event this week. I know some of our customers were chatting to Vlad and telling him exactly the same thing. And we hear that, and we always do build our products for UK customers and with them demands in mind. So yes, it's definitely...
So it's coming, but there's no date yet.
No date yet, but we hear you.
Well, it's been exciting hearing about the products you have launched and the things you're doing to try and help people invest. So we'll take a very quick break and then we'll come back and we will zoom out and explore what this means for the future of financial services.
Experience a membership that backs your business journey with American Express Business Platinum. When you pay with membership rewards points for all or part of an eligible flight booked with a qualifying airline through Amex Travel, you can get 35% of those points back, up to 1 million points back per calendar year. American Express Business Platinum. There's nothing like it. Terms apply. Learn more at americanexpress.com/business-platinum.
With the all-new Dynasty Blueprint in EA Sports College Football 27, you can build your program by earning Dynasty points to spend on NIL, staff, and more. But the fun doesn't end at graduation. With the EA Sports MVP Bundle, get College Football 27, Madden NFL 27, plus Deluxe Edition rewards in both games. Make your rise with the MVP Bundle, available now at EA.com. Rated E for everyone with mild lyrics, user interact, and in-game purchases. Includes random items. Conditions and restrictions apply. See the link for more info.
Welcome back to FinTech Insider Insights, where I'm in conversation with Jordan Sinclair, president of Robinhood UK. Before the break, we explored Robinhood's latest announcements and the thinking behind Borderless Markets, Robinhood Chain, and the company's vision for AI-powered investing. Now let's zoom out and think about where financial services goes from here. Robinhood's never been afraid to sort of challenge industry norms. You're sort of one of the firms perhaps most willing to disrupt. Whether that's a good thing or a bad thing is a different conversation. What do you think is sort of comes next? What are some of the next sort of assumptions, conventional wisdoms that need to be sort of broken or challenged? You know, where's the sort of bad boy in you going to go sort of next and sort of push back on and try and improve?
I don't necessarily think of it from a bad boy or disruptive perspective, but more of how do we give customers access to what institutional customers have had for years? Mm-hmm. And that divide was historically far too great. We've certainly helped bring it closer, but we see even more opportunity for a level playing field. And I think you saw with the rise of crypto, it was very retail driven, where customers now had access to something and they wanted 24/7, and they saw it as a market that gave them an opportunity that perhaps the traditional markets didn't. I think private markets is where you see the same thing happening, where And it's highlighted by, I think, the likes of SpaceX and Anthropic and OpenAI. And I think some of the news around AI in general is there are a few people that are benefiting from this great wealth accumulation of what is an incredible technology. But how do retail customers share in that wealth? And I think when you're looking at some of these models and what they're achieving, if you're a retail customer and you say, well, what's in it for me? You really get to the crux of it, and it's ownership. Right? That's what we see is the probably disruption that tokenization can help achieve is you give customers access to markets that traditionally either retail's been excluded from, locked out, or legacy infrastructure just doesn't support it. So that's what we've started with. I think what you see now is the Robinhood Chain is an infrastructure built for tokenization of real-world assets, built for a world of AI, built for a world of DeFi, where others have launched chains, right? I think you see some news headline, and that's okay. But what we built for is fit for purpose, and then launched products which bring the two worlds together. In the US, we recently launched our Robinhood Earn crypto product, which gives customers a yield of 7%, where they can actually lend their USDG, which is a stable coin we're in partnership with, where you transcend the world of DeFi, where for some customers that can be a little bit tricky to access. Historically, wallets have also been pretty clunky, or the user experience.
Crypto wallet.
Yeah, exactly. I mean, what you see is now the Robinhood wallet, which actually has the experience of a Robinhood product rather than an afterthought. But you start to see these worlds converge, and the way we think about it is if you can provide better access and then think about customer pain points. And DeFi, I think lending, there's some stories out there, of course, where things haven't gone quite as planned, and customers then have a feeling of, well, high yield is at the kind of downside is the risk that comes with it, and there's no protection or insurance. The product we've launched actually comes with Lloyd's of London and Realm Insurance, which I think to my knowledge is the largest crypto insurance program, where now customers are actually given access in what looks and feels like a traditional finance app, DeFi and Robinhood Chain, and the benefits of perhaps the future with protection in place to actually make them feel safe. So I think the way I describe it is you see these worlds converging in ways that perhaps many thought wouldn't. They might live separately. We don't see it necessarily that way. But also building out the ability to give customers ownership of assets that they haven't been able to.
To do that, you've obviously got to get access to those assets in the first place. So presumably the thinking is that, a company like Anthropic or SpaceX or whoever, Robinhood is looking to sort of take part in capital raises or whatever when they do that, and saying, look, we've got 26, 27 million investors. I can't remember how many you've got. 28, thank you. And we'd like to be part of that fundraise. We'd like to contribute to the sort of private market fundraise because you've got to get access to a portion of those companies, right? In order to give your own investors. Is that how it's going to work? I mean, because the tokenization doesn't unlock ownership of those assets, does it?
There's a couple of ways we do that already, actually. So we have Robinhood Ventures, which is a closed-end fund that trades publicly in the US. And in that portfolio, you have the likes of Airwallex, Aura, Revolut, which is known to our UK customers here. You have OpenAI, where now we're giving customers access to a private market fund of sorts, which they can trade in app as if it was just a fund trading on the index. That's one start, right? How did retail get access to that? Initially, they couldn't. Then the other side is we actually gave customers in a giveaway SpaceX and OpenAI tokens in Europe last year, where that was through somewhat of a vehicle structure like you described, but it demonstrated that it can be done. And when the lockup period that comes with a listing like SpaceX expires in December, customers will actually get ownership of that. Another mechanism is pre-IPO access, where customers actually get the ability to submit an order and make a request for an allocation in a large IPO like SpaceX. That sounds silly, like why didn't they always get that? But that hasn't been the case for retail, right? And why not? Here you have this enormous financing event, and retail, with the afterthought of once it's listed and the price moves up or down, well, then you can get in, and institutions, well, they'll make their moves. And I think there's many reasons of why perhaps retail didn't always come off best in those scenarios, but now you give customers that access. So I think there's many ways you can do this. And then you think about a tokenized world too, where you can hold the underlying and create a stock token and be able to do this in these large growth companies like your Stripes and your Revoluts, which are at a level where you're actually giving customers an asset that is growing and is of scale. So I think from a risk profile, you have a at scale business that have access to, but they may stay private for much longer, and then they still may list. So I think there's a very different journey for wealth accumulation in assets like this. So I think it's exciting.
It's exciting. It's also really interesting because you're coming into European markets that already have other established digital brokerages. We've got all sorts of firms like Lightyear or eToro or Trade Republic. All of these firms. And so for Robinhood to come in and compete, you've got to sort of differentiate from them in some way. So it's interesting hearing, you talking about sort of tokenization and private market assets and so on, because presumably that's part of how you're going to sort of differentiate Robinhood from, the other digital brokerages that Europeans customers can already use. Is that right?
That's always how we've run our business. We don't necessarily copy anyone else. We don't have a particular competitor in mind that we're building side by side, but we look at the way things are and think about, well, why can't they be different? So in the US, you take, for example, we were the first firm to launch commission-free trading. Every other brokerage in the US charged customers to just buy an equity. Fast forward to 2019, I think, every broker went commission-free. In the UK, since we launched, we've seen incumbents already changing their price schedules, doing exactly the same. So I think access and price is something we always do believe we can do better. Product, I think it's crazy if you look at some of the names you mentioned across the kind of landscape, how limiting it is for customers to get basic access in terms of data and pricing around a stock where they're going to invest in it. It's either behind a paywall, it's either delayed, it's information that's very basic. So we do see this opportunity where you, with the scale and knowledge and kind of product excellence that we aspire to and constantly deliver, when you bring it globally, we already see and we know customers have an appetite for something better. But you also need to differentiate. You need to do things that others don't do. I think Cortex is a wonderful example of that, where we're building proprietary AI tools for customers that are going to be better than they can get anywhere else. Legend, our web trading platform, we believe customers are at a disadvantage not using it. I think that's the way you got to kind of think of expansion is, yes, cater for local customers. Yes, bring the Robinhood that they love, but what can you do differently as well? And often that's just looking at the market and saying, why is it like that? Why can't it be like this? And I think that's the way you build for customers.
Interesting point you raised about pricing, because of course part of the way you were able to do that in the States was payment for order flow, which of course isn't currently allowed in the UK. I know the FCA is now sort of looking at it and thinking about it. Can you achieve the same kind of low costs in Europe that you've achieved in the States? I suppose you can still get the payment for order flow on the US equities, so that doesn't really affect your cost model, does it?
We don't own payment for order flow here in the UK, but we have a diversified business model that we earn revenue in multiple ways. And in the US, payment for order flow on our equities trading is probably around 5%, less than 5%. It's really small. I think historically, people assumed that it was a larger part of our business, but we have 11 business lines that make over 100 million individually. We're a diversified business that's profitable. So we're not reliant on that as how we expand. When you look at the market like the UK, we do offer equities trading that doesn't charge customers a commission, and we still believe that gives them great access. But when it comes to other products, for our options product, we do charge a small commission, and for our futures product, we do too. I think when you look at those landscapes, though, it's probably the customer that loses out often in these different markets where there's slightly different market infrastructure and market structure as well. The customer ends up paying fees. But what you look at what you are charging a customer versus what they've been paying in the UK, I mean, an incumbent that charges customers, they want to buy Apple, £12 trade on the way in, I think it's 1.5% FX, then £12 on the way out. what happens if you only had £100 and you wanted to get started and you got an Amazon delivery at home and you thought, I've probably got about 20 Amazon deliveries in the last 3 weeks. This is maybe a company I'm interested in. I summed up Peter Lynch kind of mental model of buy what you know type of thing. And then you go and buy it and you've spent £30 on fees. That's crazy.
Yeah, I agree. Things like, introducing fractional stock trading and so on, those kind of innovations have really helped to make it easier for smaller investors to get access, as you say, to some of those equities that they want. So if we look ahead, you're bringing in tokenization, we're looking at sort of programmable finance, we're looking at more use of AI. How does the sort of mainstream investor in 5-10 years behave differently to today? I mean, some of what we've been talking about today is sort of, tools for sort of more active traders and so on, but you've also got sort of more mainstream traders, perhaps particularly in the UK, that sort of buy and hold. How does what they're doing perhaps look different in 5-10 years to how it looks today because of some of these innovations you're bringing from institutional markets and the technology innovations you're doing? What do you think? Can you sort of sum up how investing becomes different for people in the future?
I think you do always have to build for those two customer sets. With the beginner customer who's making their first investment, when you come into actually your first stock is on us, and the first thing you see is learn about investing. Then the customer who wants to trade options and futures and is kind of a lot more advanced. I do think you see a convergence of the kind of centralized and decentralized financial worlds over time, and an experience where it probably looks and feels a little bit like it is today, but it might be a wallet that's sitting underneath it, and customers can actually use these stocks for something else. And I think tokenization can be a powerful tool in order to let them take them somewhere else, send them to someone else, earn yield on it, be able to generate income on what traditionally has been a buy and hold and it's stuck. I think that transferability is something that we'll see in 5 to 10 years, where customers can use it in other places, which kind of wealthy customers have been using in a way over time. 24/7, I think, is something you'll see probably sooner than you expect in terms of the ability to have a market that is open all day, every day.
Is that good for people's mental health? Let's not go there.
I think that
I think it's good in some ways.
It's important to have limits, but I think often you got to think about it, access and then the right controls to make sure it's the right people. Yeah. But I mean, the world we live in today, there's often a tweet on a Friday night when the markets are closed, and a one on Sunday afternoon or evening just before futures start. So I think there is a world where I think customers should probably have access and they don't. And then I think it's asset classes. Like traditionally, the customer today is looking at public equities and thinking, okay, well, that's the extent of my discoverable and investable universe. But I do think customers will think about other markets, how that fits in their portfolio. And then when you have the tools and support of AI and agentic trading, you can probably think about your tax strategies in a lot more of a professional way, which customers often have had advice, but could you just lean on some basic information out there and help you decide SIP, ISA, junior ISA, capital gains? I think all of that is an opportunity where you start to see that the retail investor has a lot of the tools and power in their pocket, were they to use it or whether they want to access it, that for a long time has always felt like it's just for the wealthy customer who's got a private banker and Canary Wharf. We were talking about Canary Wharf earlier.
We're almost out of time, so I've got 2 last questions. First one is, what do you do at Robinhood to try and protect customers from their sort of worst instincts? Because everybody makes mistakes when they first start investing, and some people continue to make mistakes throughout their investing career. And of course, investing in the wrong thing is part of investing, but you also can end up with people almost systematically doing the wrong thing, people piling into one stock, ending up in very concentrated positions, or people trading very frequently in a way that's just costing them lots of money and not actually producing any kind of return. How do you think about that? And when do you sort of think about stepping in or nudging a customer or reminding a customer if they end up hugely concentrated in, let's say they just pile everything onto one crypto asset, or they pile all their money onto one stock, or something that's obviously risky? What do you do in those kind of situations to sort of say, hey, cool it?
You always have to build a product that balances a great experience that's intuitive with also the right controls to make sure that the right customers getting into the right product. That's a very thoughtful way we build our products. When they want to start using a different feature or product, have we made it clear the benefits and the risks? Have we shared additional information? Have we made it clear where they can learn more? Have we considered risk profile? Have we considered who this customer is in terms of the information we do have about them? Have we tested their knowledge and experience through an appropriateness test? I think all of those guardrails cumulatively actually provide a set of kind of conditions and controls where the right customer is getting into a product that is maybe for the slightly more advanced customer, or the customer who has more experience or knowledge on, let's say, trading options or trading futures, where maybe that's not where they started. And I think that's an important piece, but the ongoing kind of support through customer service, I think, becomes really important going forward. And you talked about what does it look like in 5-10 years. I think support actually improves more and more, where for us, we give customers access to actual humans. You can speak on the phone, email, 24/7 chat. And I think that's a big differentiator. And I think it will be more and more going forward, where, yes, I have a lot of things set up running in my app. Yes, I have access to products and features, but can you help me? Or who can I speak to? And we find that it's usually powerful with our customers to know that they can speak to our agents who are trained and thoughtful and be able to speak to a customer and support them or find out ways to support them. I think that's the important piece, where just putting out a product and then giving them a chatbot, I don't think is the best way to support customers.
Yeah, I agree. That lack of advice, access to advice and reassurance has been a huge gap in this country and many, many countries. So having a human you can just speak to and just check things is great. All right, final question. For people who are listening, what can people do if they want to join Robinhood? How do you become a Robinhood customer?
You can go to the App Store, Google Play or Apple App Store, and download Robinhood and get started. The first stock's on us. And I think also our learning materials are free and available for everyone. So I use our website as a learning mechanism if you aren't ready to get started. And if you are, I'm pretty sure you'll love our app.
Fantastic. And the app is beautifully designed. Well, that wraps up today's discussion. Huge thank you to our guest this week, Jordan. Thank you so much for joining us. Where can people connect and find out a little bit more about you and the work that you're doing?
You can join me on LinkedIn as Jordan Sinclair. And if you're in South Africa in the holidays, Cape Town Beach is probably where you'll find me.
I definitely have to make it to Cape Town Beach one day. All right. And you can find me, Benjamin Ensor, on LinkedIn. So thank you all so much for listening. If you like what you heard, please do follow our podcast. Do recommend us to your friends, your colleagues. If you want to join the conversation, seek us out on social media. Just search for 11FS or FinTech Insider, or you can email us at podcasts@11fs.com. Thank you very much, and goodbye.
Your team just added its 67th AI tool, and also your 67th security blind spot. The good news? The Vanta agent works like a GRC engineer in the background, finding every app your team uses, scoring the risk, and drafting fixes for you. Vanta is the platform used by over 16,000 fast-moving companies like Ramp, Cursor, and Harvey, who are shaping the future with AI and staying ahead of AI risk. Get started at Vanta.com.
A burst pipe. A dead water heater. The AC calling it quits. Who do you call? HomeServe is an easy way to handle unexpected home repairs, with plans covering stuff basic homeowners insurance usually won't. Instead of scrambling for a contractor, you make one call to get the repair process started. Join the millions of customers who trust HomeServe right now. Go to homeserve.com/podcast for 50% less your first year. That's homeserve.com/podcast. Savings compared to renewal price, void in Florida.
Queen Carvania stood haloed by the morning sun. An army hung on her every word.
My champions, I have sold my chariot on Carvana. 'Twas a lovely SUV, an inexplicably queenly offer. They're even coming to the castle to collect it. Tonight, we feast! An offer you can feast on. Sell your car today on Carvana. Pickup fees may apply.